There comes a moment in every trader's journey when the charts stop being the problem, the strategy stops being the obstacle, and the market stops being the enemy. What you're really facing is yourself. And that's the doorway to the evolution every trader must go through. Not the evolution of skill, but the evolution of identity. Because the truth is simple. You don't trade the markets. You trade your beliefs about the markets. You don't react to price. You react to what you think price means. And unless you've rebuilt your internal framework, the beliefs, expectations, fears, and unconscious assumptions driving every decision, you remain stuck in the same loop, repeating the same mistakes with different charts. The evolution begins when you finally accept that the market is nothing more than a neutral stream of opportunity. No pressure, no judgment, no agenda, just movement. The only story attached to that movement is the one you project onto it. But as long as you cling to that story, your need to be right, your fear of loss, your desperation to avoid missing out, you distort information, sabotage your edge, and unconsciously create the very outcomes you fear. The market becomes a mirror reflecting your internal conflict. Yet the moment you stop trying to control the market and start taking responsibility for your perceptions, something extraordinary happens. You stop fighting uncertainty and start operating with it. You stop protecting yourself from imagined threats and start trusting the process. You stop trading for emotional validation and start trading for statistical edge. That's the secret evolution every trader must complete. Shifting from a mindset that reacts to the market to a mindset that flows with it. From the trader who tries to predict and protect to the trader who simply executes and accepts. From the identity rooted in fear to the identity rooted in probability, this evolution isn't optional. It's the threshold between inconsistency and mastery. And once you cross it, trading doesn't become easier. You simply stop getting in your own way. The market hasn't changed. You have. Real transformation in trading happens internally. Your evolution is psychological, not technical. Most traders resist this truth for years, sometimes for an entire career, because it feels counterintuitive. It feels more comforting to search for tools, indicators, mentors, signal services, or secret methodologies than to confront the invisible battlefield inside their own minds. Charts can be analyzed, indicators can be learned, systems can be copied, but there is no shortcut, no checklist, no external trick that can replace the internal shift required to become a consistent trader. And until that shift happens, you will sabotage every system you try, no matter how well it works for someone else. The market exposes a simple paradox. The traders who obsess over technical knowledge rarely evolve, but the traders who evolve psychologically find that technical knowledge becomes effortless, almost secondary. The real conflict is never between you and the market. The conflict exists between the part of you that wants to win and the part of you that is afraid to lose. Between the part of you that desires clarity and the part of you that clings to certainty. Between the part of you that trusts your edge and the part of you that needs emotional validation. Trading doesn't demand better entries or smarter indicators. Trading demands that you become someone who can operate in uncertainty without fear, without hesitation, without needing the market to behave in a way that protects your ego. This is why the internal evolution is so rare. It requires you to unlearn beliefs that have been shaping your behavior long before you ever placed your first trade. You were trained, growing up, to avoid mistakes, to avoid uncertainty, to avoid loss. Mistakes were punished, risk was discouraged, failure was considered a sign of incompetence, not a natural part of a probability-driven environment. And without realizing it, you bring that conditioning into the market. You enter a trade and immediately feel the need to be right. You monitor every tick as if the chart is either validating or attacking your identity. You react emotionally because your childhood programming taught you that being wrong is dangerous, embarrassing, or unacceptable. But the market does not care about your upbringing. It doesn't care about your expectations, your hopes, or your fears. It simply moves through infinite combinations of order flow and liquidity. It doesn't reward effort, discipline, passion, or potential. It rewards alignment with probability. And probability is neutral. It has no emotional meaning. If you bring emotion into a neutral environment, the environment won't adapt to you. You will distort the environment through your perception. You will see danger where there is only movement, opportunity where there is only randomness, and confirmation where there is only noise. This is why psychological evolution is not just important, it is everything. Traders who fail to evolve continue to experience the same patterns, cutting winners too early because they fear giving money back, holding losers too long because they can't accept being wrong, overtrading because they're driven by impulse instead of plan, hesitating because they're waiting for certainty that never comes. These behaviors have nothing to do with lack of skill. They are manifestations of internal beliefs in conflict with the realities of the trading environment. True evolution begins when you stop trying to trade the market and start learning how to trade your own mind. The external environment is uncontrollable, but your internal responses can be reconditioned. And once you recondition them, trading becomes less about performance and more about alignment. You begin to see setups clearly because your mind is no longer trying to extract security from uncertainty. You begin to respect your stops because losses no longer carry emotional meaning. You begin to hold winners because your identity is no longer threatened by the temporary fluctuations within a profitable move. You begin to execute flawlessly because you are no longer seeking confirmation, reassurance, or perfection from a market that cannot offer it. Most traders believe transformation happens when they finally find the right strategy. But the truth is the opposite. The right strategy works only when you have become the kind of trader who can execute it without internal resistance. A system that works for one trader will fail for another because the system doesn't trade itself. The trader does. And the trader brings their entire psychological framework into every decision, their beliefs about uncertainty, their beliefs about probability, their beliefs about loss, skill, worthiness, and identity. If your beliefs are misaligned with the reality of the market, your actions will be misaligned with the reality of the market, and no amount of technical knowledge can compensate for that. A trader can possess the most precise strategy in the world, backed by years of data and statistical edge, and still fail because their internal narrative overrides their external discipline. They hesitate not because the setup isn't valid, but because their mind hasn't evolved to trust probability over emotion. They exit too early not because the chart demands it, but because their identity can't tolerate discomfort. They revenge trade not because the market presents a genuine opportunity, but because their ego demands restoration. Internal evolution removes all of this friction. It frees you from the emotional charge that distorts your perception of opportunity. It separates your identity from the outcome of any individual trade. It creates the mental space required to see the market as it is, not as you need it to be. Once you understand that the market's movement is nothing more than a collection of statistical tendencies playing out over time, you stop personalizing the outcome of each trade. You stop fighting the market's nature. You stop trying to control what cannot be controlled. The real transformation occurs when you finally accept that being wrong is part of being right over a series of trades. When you internalize that every loss is simply a cost of doing business, not a threat to your competence. When you operate with the understanding that consistency comes from neutrality, not perfection. You evolve when you detach from the illusion of control. You evolve when you step into the flow of uncertainty rather than resisting it. You evolve when your actions align with your edge, not your emotions. This evolution is not dramatic. It doesn't happen in a single breakthrough moment. It happens slowly, almost invisibly, through countless experiences, realizations, and internal confrontations. You begin to notice the subtle shift the first time you take a loss without emotional reaction. You feel it when you skip a low-quality trade without regret. You recognize it when a setup appears and your mind remains calm, focused, and ready to execute rather than anxious and reactive. The transformation deepens the moment you realize you are no longer trading to avoid pain. You are trading to express a probability-based mindset. At this stage, technical knowledge becomes a tool rather than a crutch. You use it to measure opportunity, not to manufacture certainty. You follow your plan because it reflects statistical truth, not emotional need. You execute because you trust the process, not because you need the market to validate your decisions. You accept every outcome with composure because you know your long-term performance is a reflection of your behavior, not the result of a single trade. Real transformation in trading is the shift from emotional interpretation to objective observation. It is the shift from needing to be right to needing to follow your edge. It is the shift from protecting yourself to allowing yourself to participate fully in a probabilistic environment. This is the evolution that separates inconsistent traders from consistent ones. It is the silent transition, where you stop sabotaging your own progress and start embodying the traits of a professional. The evolution where you become a trader who is no longer influenced by fear, hope, or ego, but guided by clarity, acceptance, and neutrality. When you finally complete this internal transformation, Trading stops being a struggle. It becomes a process, a simple, repeatable expression of your ability to align with uncertainty and probability. And in that alignment, you discover the consistency you've been chasing all along, because the market never needed you to know more. It needed you to become more. You evolve the moment you stop negotiating with uncertainty and start aligning with probability. Until that moment comes, trading feels like a constant internal war between what you see on the chart and what you fear might happen. Next, between the logic of your strategy and the emotional impulses that push you away from it, between the reality of risk and the illusion of control your mind tries desperately to maintain. Most traders try to bargain with the market as if uncertainty can be tamed, managed, outsmarted, or avoided. They try to wait for the perfect signal, the safe entry, the certain confirmation. But all of these attempts stem from the same psychological trap, a refusal to accept that the market is an environment of pure uncertainty, where anything can happen at any moment. As long as you negotiate with uncertainty, you stay trapped in fear. You analyze too much, hesitate too long, react too fast, and distort information to fit the narrative that feels emotionally comfortable. You interpret price not as neutral data, but through the lens of what you hope or fear it will do. You enter too late because you want more proof. You exit too early because you want less risk. You hold a losing trade because you want the pain to stop. None of these decisions come from probability. They come from the mind's desperate attempt to escape the discomfort of uncertainty. This is why the evolution into a consistently profitable trader is not intellectual. It is emotional. It is the transformation from a human being conditioned to avoid uncertainty into a participant who embraces it. The mind seeks certainty because it believes certainty equals safety. But in the market, certainty is an illusion that destroys traders. The moment you cling to the need to be right, the market will show you how wrong you can be. The moment you cling to the idea that a trade should move a certain way, the market will move the opposite way. The moment you demand clarity from an environment built on randomness, you blind yourself to the truth of what's unfolding. Aligning with probability means surrendering the illusion of control and embracing the only thing that matters, long-term consistency. Not individual trades, not temporary outcomes, not emotional comfort, but the statistical reality that over a series of trades, your edge, executed without hesitation or distortion, will play out. When you truly understand this, your actions shift. You no longer need certainty. You no longer chase reassurance. You no longer panic when price fluctuates. You execute because the probabilities support execution, not because you feel protected or confident or validated. But to reach this point, you must confront the most difficult truth in trading: the market owes you nothing. It doesn't respond to your needs, your hopes, your analysis, or your emotional state. It simply expresses the collective beliefs and behaviors of thousands of participants. You can't predict their actions with certainty. You can only work with patterns of behavior that tend to repeat. That is what probability is. Probability is not prediction. Probability is alignment with tendencies that offer an edge over time. And when you align with those tendencies consistently, without interference from your emotional conditioning, you evolve into a trader who no longer battles the market, because there is nothing left to battle. You operate within the market's natural laws rather than resisting them. Most traders resist uncertainty because they carry subconscious beliefs that make uncertainty feel threatening. They associate uncertainty with danger. They associate being wrong with emotional pain. They associate losses with personal failure. They associate randomness with lack of control. These beliefs force them to seek certainty where certainty does not exist. They look for confirmation that a trade is safe, even though no trade is ever safe. They wait for more information, even though more information often means worse ENTR. They adjust stops impulsively because the market is not moving the way they expected, forgetting that the market is not required to fulfill any expectation. Negotiating with uncertainty is simply negotiating with your own fear. And as long as fear guides your decisions, probability cannot. The two cannot coexist. Probability is logical, statistical, neutral. Fear is emotional, reactive, and driven by the avoidance of pain. You cannot trade with an objective mindset while operating under the influence of emotional discomfort. The moment your decisions are driven by fear, your edge dissolves. The moment your beliefs distort your perception, your execution collapses. This is why the real breakthrough happens internally, not in your strategy. Evolution begins when you stop resisting the psychological discomfort that naturally comes with being a trader. You stop needing to be right. You stop needing to avoid losses. You stop needing guarantees. You stop negotiating with uncertainty because you accept that it is eternal, unavoidable, and integral to the nature of markets. You evolve when you internalize, deeply, not just intellectually, that anything can happen at any moment. And not only that, but you become comfortable with it. When you stop fighting uncertainty, uncertainty stops controlling you. You begin to experience a form of psychological freedom that changes everything about the way you trade. You no longer feel pressured by fluctuations in price because fluctuations are expected. You no longer react emotionally to losses because losses are expected. You no longer overanalyze entries because perfection is impossible. You no longer panic when trades don't immediately go in your favor because variance is part of every edge. Aligning with probability transforms your behavior from reactive to objective. You execute your plan because the plan has statistical merit. Not because you feel good, not because the market looks right, not because you are trying to avoid emotional pain. You trade to express an edge, not to satisfy an emotional need. Your self-worth is no longer tied to outcomes. Your identity is no longer threatened by randomness. Your ego is no longer involved in the result of any single trade. This internal shift changes the quality of your decision-making. You begin to see price action clearly, without distortion. You recognize that the outcome of any given trade is irrelevant as long as your actions align with probability over time. You stop judging yourself by wins and losses. You judge yourself by consistency of execution. You realize that your job is not to predict the market. Your job is to execute your edge flawlessly. You become calm, neutral, disciplined, not because you force discipline, but because discipline becomes a byproduct of acceptance. The traders who thrive are not the ones who know the most. They are the ones who accept uncertainty completely. They don't negotiate with risk. They don't argue with the market's movement. They don't demand perfection from trades. They don't attach emotional meaning to random outcomes. They don't attempt to control what cannot be controlled. They simply align with probability and let the law of large numbers do the rest. This level of psychological evolution is the foundation of consistent profitability. It is the moment you stop sabotaging yourself. It is the moment you stop interfering with your own edge. It is the moment you stop being the source of inconsistency in your trading. Before this evolution, your results are dominated by emotional impulses. After this evolution, your results are dominated by statistical truth. Nothing else changes. The market remains the same, your strategy remains similar, but you are different. You begin to trust your stop because a single loss cannot threaten a probability-based mindset. You begin to hold winners because you no longer expect certainty from temporary fluctuations. You begin to follow your plan because the plan reflects probability, not emotion. You begin to act without hesitation because hesitation only exists when you seek emotional safety. You begin to trade from a state of acceptance rather than a state of resistance. This is the essence of trading evolution, the shift from resisting uncertainty to embracing it, from seeking certainty to operating within probability, from trading emotionally to trading objectively. When you stop negotiating with uncertainty, your mind becomes quiet. Your decisions become simple. Your actions become clean. You become aligned with the essential truth of markets. That consistency emerges from the ability to operate neutrally in an environment of complete unpredictability. This is the moment you evolve, not when you find a new indicator, not when you backtest a new system, not when you study more charts, but when your internal relationship with uncertainty changes, when the need to feel safe no longer overpowers the need to execute your edge, when the desire to avoid pain no longer overrides logic, when the illusion of control stops blinding you, when probability becomes the foundation of your identity as a trader. You evolve the moment you accept uncertainty instead of arguing with it, the moment you trust probability instead of your emotions, the moment you stop trying to protect yourself and start allowing yourself to trade with clarity. That is the moment trading stops being a struggle and becomes a process. That is the moment you become consistent. That is the moment you finally stop fighting the market and stop fighting yourself. The true secret of trading evolution is shifting from a reactive mindset to a neutral, process-driven identity. Thank you. This shift is the dividing line between traders who are ruled by emotion and traders who are guided by clarity. It is the transition from being someone who trades in response to fear, hope, impulse, and the illusion of control into someone who calmly executes their edge, regardless of what the market is doing. And this shift is the only transformation that creates long-term consistency. Most traders believe their problems come from technical gaps. They assume better indicators, smarter systems, or more experience will finally remove the chaos from their trading. But the chaos is not in the market, it is inside their own mind. The market is neutral. It offers no pressure, no threat, no reassurance. It simply moves. What creates pressure, fear, hope, and anxiety is the meaning the trader places on that movement. A reactive trader interprets every tick as a signal of personal gain or loss. A neutral trader sees every tick as information. A reactive trader gets pulled into the emotional story of the moment. A neutral trader remains aligned with the larger process that plays out over hundreds of trades. A reactive trader is controlled by the market. A neutral trader is controlled by their plan. The difference between the two is not skill, intelligence, or experience. It is identity. A reactive identity is built on the need to feel safe, the need to feel right, the need to protect oneself from loss, embarrassment, or regret. This identity turns every trade into a test of worth. It turns every position into an emotional battlefield. It forces the trader to manage fear rather than probability. It makes them interpret random movements as threats. It makes them exit too early because they can't handle discomfort. It makes them hold losers because they can't tolerate being wrong. Nothing about this identity is aligned with the nature of markets. It is built on the opposite of what trading requires. A neutral, process-driven identity does not resist uncertainty. It doesn't reject losses. It doesn't demand validation. It doesn't personalize outcomes. This identity accepts that each trade is just one event in a much larger distribution of outcomes. It understands that the only thing a trader can control is their behavior, not the market's response. It embraces the fact that consistency comes from the ability to follow a process, not from the ability to predict or avoid pain. This identity is rooted in emotional neutrality, not emotional reaction. It is rooted in acceptance, not resistance. It is rooted in clarity, not fear. The evolution from reactive to neutral is not something you can force through willpower. You cannot simply tell yourself to be disciplined or be patient or stay calm. A reactive trader cannot become neutral by trying harder. Trying harder only amplifies the internal conflict. The real change happens when you strip away the beliefs that cause reactivity in the first place. When you stop giving emotional meaning to market noise. When you stop linking your self-worth to the outcome of single trades. When you stop interpreting losses as failures and start seeing them as natural costs. When you fully accept that uncertainty is the essence of trading and not a defect in your strategy. A reactive mindset is built on false expectations. It expects the market to behave predictably. It expects setups to work reliably. It expects confirmation before action. It expects comfort in moments that require discomfort. It expects the market to reward good behavior and punish bad behavior. These expectations are not only unrealistic, they are psychologically destructive. They lead to disappointment, frustration, and emotional swings. They turn trading into a roller coaster of highs and lows. They create a trader who is constantly chasing feelings rather than following probabilities. A neutral mindset, by contrast, removes all such expectations. It understands that anything can happen. It knows that the market is under no obligation to reward a well-planned trade. It knows that good trades can lose and bad trades can win. It knows that randomness is part of every outcome. It knows that emotional comfort is irrelevant to probability. By removing expectations, the neutral trader removes emotional volatility. They create mental space for clarity to operate. They allow themselves to see the market without distortion. But neutrality does not mean detachment or apathy. It means clean execution. It means accepting results without judgment. It means trusting the edge without interfering. It means operating like a professional who understands the nature of the IR business. A process-driven identity is committed not to outcomes but to behaviors. It focuses not on what the market might do, but on what the trader must do. It understands that consistency is the result of repeating the same high-quality actions regardless of the immediate payoff. The reactive trader asks, "Is this trade going to work?" The neutral trader asks, "Does this trade align with my edge?" The reactive trader asks, "How can I avoid losing?" The neutral trader asks, "How can I execute flawlessly?" The reactive trader focuses on the now. The neutral trader focuses on the next 100 trades. This shift transforms the entire trading experience. It removes the internal noise that makes decision-making chaotic. It replaces pressure with clarity. It replaces fear with acceptance. It replaces hesitation with consistency. When your identity is rooted in process, your emotions stop interfering with your logic. You measure success by the quality of your decisions, not by the size of your wins. And because your decisions become consistent, your long-term results become consistent. Every trader thinks they want profitability, but what they actually need is neutrality. Profitability is the outcome. Neutrality is the prerequisite. Without neutrality, every strategy becomes unstable. Without neutrality, every execution becomes compromised. Without neutrality, every loss becomes emotional, every win becomes addictive, and every trade becomes an attempt to repair or protect your identity. A process-driven identity breaks this cycle. It creates a trader who no longer sees the market as a threat or a savior. It creates a trader who views the market as a field of opportunity, neutral, impartial, and unpredictable. It creates a trader who responds to structure, not emotion. It creates a trader who acts from clarity, not impulse. This evolution also changes the way you experience time. Reactive traders live in the micro, tick by tick, moment by moment, emotion by emotion. Neutral traders live in the macro, series by series, pattern by pattern, process by process. The micro mindset is volatile and fragile. It is easily shaken, it is easily seduced, it is easily overwhelmed. The macro mindset is stable, grounded, and composed. It sees the bigger picture. It understands that each trade is a tiny fraction of a much larger statistical journey. The moment you shift from reactive to neutral, the market stops feeling like an opponent. It stops feeling like something you're battling. It becomes a space in which you operate, not a force you must resist. The internal struggle ends. You are no longer trying to protect yourself from the market. You are simply participating in it. You stop fighting the nature of price action, and instead you flow with it. You stop fearing losses, and instead you accept them as part of the process. You stop chasing perfection, and instead you commit to consistency. And that is the core truth. Your identity determines your behavior, and your behavior determines your results. A reactive identity produces inconsistent actions. A neutral identity produces consistent ones. A reactive trader is controlled by emotions. A neutral trader is controlled by rules. A reactive trader trades to avoid discomfort. A neutral trader trades to express an edge. A reactive trader is shaped by every tick. A neutral trader shapes their long-term equity curve through the steady discipline of statistical alignment. The evolution into a neutral, process-driven identity is not just the secret of trading, it is the requirement of trading. It is the transformation that turns chaos into structure, noise into clarity, and randomness into opportunity. It is the transformation that removes the psychological turbulence that sabotages your edge. It is the transformation that allows you to execute with confidence that does not depend on outcomes. This shift is not easy, but it is the most liberating experience a trader can undergo. It is the moment you finally step out of your own way. It is the moment you stop interfering with your potential. It is the moment you stop being the cause of your own inconsistency. It is the moment trading stops being emotional warfare and becomes a professional practice. The true secret of trading evolution is not found in strategies or indicators. It is found in the quiet, internal shift from reactivity to neutrality, from emotion to process, from attachment to acceptance. When you make this shift, the market does not change, but everything about the way you trade it does. This is the moment you finally become the trader you were meant to be. In the end, trading mastery is not earned through complexity, prediction, or perfection. It is earned through identity. When you release the need to react, control, or negotiate with uncertainty, you rise into a mindset where the market no longer dictates your emotions. You become a participant, not a prisoner. Consistency stops feeling like a struggle and becomes the natural result of a process you trust. This is the evolution every trader must complete, shifting from a mind driven by fear and impulse to one grounded in neutrality, clarity, and probability. When you become that trader, the market finally opens to you.